All right, here on the program, it's time to review the markets from this week. What a week it has been. Eric Osterhaus, Paragon Ag Advisors, here with us. Eric, the corn market actually was in record territory short areas. Hogs were in pretty short as well. Cattle, we've got long positions in cattle right now. That's a different story. But what about the ags this past week? All of the ag commodities, both grains and livestock. What is your thought on the performance of these?
Well, I think what you're seeing, going into the beginning of the week, we talked about with a lot of our producers just how short the funds were in regards to especially the wheat market and the corn market. I mean, we're talking record levels short, which is very interesting considering the time of the year. It seemed a little offsides to be this short those particular markets already, here just being in the middle to end of March. And I think, looking at some of these outside markets that also have something to do with how the funds trade, and one of those is the dollar. And we did see a surprise this week. We saw a surprise with the FOMC actually going out and choosing not to raise interest rates. That is not what folks thought, and being very dovish on what they were going to do with interest rates. And so that gave everybody a little pause. And once that kind of gave them a pause, they started looking at the time of the year. I think you also saw some other factors that are coming out, such as you can't ignore the weather too long. The fact that we are still very, very wet, and we are going to be delayed in many areas, especially on corn. But you also saw that the time of the year just wasn't really right. And I think that kind of scared them off a little bit, in addition to this report coming up with our planning intentions report at the end of next week. And I think that was just enough to get all of them to take pause and decide they better go to the sideline with a little bit of their risk.
Well, it's obviously that a lot of folks wanted to get out of their short positions and kind of go the other way. What I find interesting about this is we have known for, several months now that the Corn Belt was wet and cold, wetter than normal and colder than normal. We've known since, back in the fall, that China had an African swine fever problem, and they were going to have to, at some point, buy pork somewhere in the not just necessarily in the United States, but around the globe. So they were going to be in the market. We've known some of these things were coming, yet the market just never responded to any of that. And now all of a sudden, it seems like the market just suddenly woke up and said, and I don't know whether it was this last big weather event that happened in Colorado, Nebraska, South Dakota, Iowa that triggered it. I don't know what triggered it, but it certainly seems like we've shifted the paradigm now and the market's really paying attention. What do you think?
Yeah, I think timing is everything, especially in the commodity markets. And it was just too easy to be short, especially like a lot of the grains during those winter months. The only thing we really had to talk about that was really important was this trade discussion. Are we getting the deal done? Are we getting the deal done? Are we getting the deal done? And being pulled higher and lower by the rumor of the week and the rumor of the day. And so it's very easy for the funds to choose one side to push, simply because they didn't have to deal or worry with some of these bothersome fundamental things, such as weather, like what we're seeing. The fact that it was really wet, during the entire winter months, especially in a lot of those areas, it was just the wrong time to get to trade that news. But everybody knows now, we're coming up on the time where it may be a game day decision as to what we plant and if we plant. So now that can come to the forefront, and I think that is a lot of what we're seeing.
I've only got a few seconds here, so just real quickly, could some of this be related to the electronic algorithm?
Yeah, I believe so. I think also leading up to this time frame, because of the time of the year, because of the trade deal, because the funds wanted to be short, it was a market that was very easy, especially if there was, it was pretty one-sided. You
Right.
have thin resistance on one side. It's easy for those algo trades to take over and run. And so I think that really added to it as well.
Yeah, I think you're right. All right, what's the telephone number?
Best way to reach us, 888-452-8751.
Eric Osterhaus, Paragon Ag Advisors, and we've got more coming up, so stay right where you are. We'll be right back.